Hello people, today we're just going to do a quick little market recap slash trade recap for the Monday the 24th of February session. Took one trade, missed out on some profit, had a great high time frame bias, had a fairly decent model, so let's dive right into it. So I'm just going to take you top to bottom how we do this. So I'm on the 4 hour because it's a Monday, there's a new week. We need to look on the higher time frame to see if there's anything going on. So just purely start by marking out these highs and lows. So I'm just going to do that and I'll be back with you. Okay, so now we've marked out the 4 hour highs and lows. We're going to jump down to the 1 hour. As we can see on the 1 hour, we have huge imbalances all the way down here from the last Friday session sell-off. So I'm not going to mark all that out on the 4 hour just because it's going to take up too much space on the chart. But just need to be mindful of it. So we've got one buy side liquidity level there. We've got one buy side liquidity there. We're on the hourly at this point. Then we've got a sell side liquidity level there. And a sell side liquidity level there. Same on here. Same on here. Jump into the 15-minute. So you can see price hasn't quite yet actually done what it is foreshadowing on the 4 hour / 1 hour candle. So yeah, here we go. We've got these hourly lows that are both untouched at this moment in pre-market. We've got the 15-minute imbalances on both of these. These need to be marked out because they've been retraced into and respected and rejected out of already. So they're clearly a working imbalance, a working fair value gap. So, that being inversed, and we need to be mindful of how price is reacting when we come into that level. And then, most importantly, we've got this new week opening gap. So one of the two main things that helped me determine my bias for today were three main things. So on the hourly, if we ignore this candle here, because that's not printed yet, we have a huge displacement leg down and we are sat nowhere near equilibrium of the range of it, consolidating sideways. So not an EQ of high time frame range and nowhere near it. Great, because to me that shows we are really holding bearish. We didn't chop very high in the pre-market Asia and London session, we just stayed consolidating. And then we've got the new week opening gap. So not only are we holding so bearish we're not even in equilibrium, we're also consolidating just above the new week opening gap. Now that is a strong draw on liquidity where when the Monday session opens after the weekend, the next lot of orders are gapped up and away from the close of the session on the Saturday. So that's a huge imbalance. There's no orders, there's no liquidity, nothing in there. And market is always going to reprice those key levels. So us being so close to it, like all of those confluences together, that was just clear as day bearish for me. So yeah, that was the high time frame, and then the low time frame. We jump down into the 5 minute, and then pre-market we can see we've had a soup of these internal highs, and we actually have created a SMT divergence where ES has failed to soup these highs. It's failed to take this draw on liquidity, whereas NQ has. ES is holding bearish structure, so we can then expect NQ to hold bearish structure thereafter. So that is everything that I have marked out in the pre-market. Now I'm just going to jump down to the 1 minute, basically run through the trade that I took and then the trades that could have been taken as well. So just going to close ES because we've got the SMT and nothing really happens on there. So boom. Okay, so here, if we jump back onto the 5 minute, we can see we've opened up the tiniest little 5 minute bearish fair value gap, and we've had a 5 minute change in the state of delivery. Where down close candles closed before the last series of up close candles. So we've had clear manipulation on the 5 minute, we've opened up a bearish fair value gap, and we've had a change in the state of delivery. There is also a 5 minute. I didn't realize this at the time because I wasn't really looking for it, but we had also delivered from this tiny 5 minute bearish fair value gap as well. But I can't take credit for noticing that because I didn't, but that was one of the confluences that moved price, as it were, so you need to know about that. So we can see we tap really perfectly into this imbalance, and then we close below the change in the state of delivery, also tapping back into this 1 minute fair value gap, but importantly as well, we tapped into equilibrium of this swing leg. So that would have been a brilliant entry. If you could have got on entry there, that would have been great. I don't know, keep your stop at the SMT high and then first take profit, being 1-to-1 RR for that sell side level, maybe just under 1R. No, about 1-to-1R. That would have been an incredible trade if you could have taken that. Like perfect. That is what's called the forever model from Justin Werlein. Go watch that. Rejecting off an imbalance, turtle soup with SMT, retrace into equilibrium, and the bearish fair value gap, changing the state of delivery. All of it is perfect trade. This is a perfect trade. It is just pre-market. So that's one of the reasons I didn't take it. But then price continues to show bearish structure, in my opinion. We get this displacement down, and then we've opened up a 1 minute bearish fair value gap, which we retrace again into discount. Models are fractal. We've got the retrace into a fair value gap and discount, and then we get the retrace into a fair value gap and discount again. Price is fractal. Models are always inside of models. So once we get a stronger bearish candle rejection out of it, I enter on this because this wick candle, this wicky candle here, as we can see, shows hesitancy to me to go either to the upside or the downside. So I'm like, okay, no worries. And then if we actually just trim it to here, just so I can actually enter. But I entered about here. I took 2 contracts on for sells. I got filled up here, but had my stop loss here, and then was targeting this. And then we can see price, boom, instantly taps my take profit. But instead of pressing buy to take my profit, I accidentally hit a sell order again, but back here. So I accidentally hit a sell order again, so I'm in another contract now. I'm in 3 contracts. So I tried to take a profit of 1 contract, but instead I accidentally added a contract. But as we can see, luckily price came down and takes off at this low again. So I press buy of 1 contract, and then I move my stop loss back to here, further down, just to tighten the risk up a bit. And then we can see market opens, we get another down candle, but we just pump towards the end, and I eventually sell for a loss because I get stopped out up here. So that is, yeah, that's a trade I took. The mistakes that I made, just going to turn the executions off. the mistakes that I made. So adding a contract, didn't really mean to add a contract, I meant to take profit. That's just a silly mistake, it happens sometimes. But then when I took off contracts again, because I took off contracts at this recent low, I didn't take off 2 contracts, so I had 3 contracts now. I should have taken 2 off and just let one run, but I didn't. I only took 1 off, and then I got stopped out on 2. So that left me down like $11 on the day, which is fine because it's a good model, but I could have ended up with some semi-decent profit on the day if I'd have done that. And I should have left my stop at an S&T high. You know, I really trusted the model. I was really bearish. I knew we were going to go down. I should have just kind of bit the bullet a bit and maybe left my stop at the S&T high and just, you know, taken the entry and let it run to the new week opening gap. I knew it was going to go there. I should have just bit the bullet. The S&T highs are always protected. If that gets taken with this move, then we're likely going to flip and be bullish. So, you know, that's just a mistake I made, but, you know, that's fine. So that's the first trade. And we're actually already seeing here the second trade play out really nicely. So if I just clear up this chart a little bit, we can see that we've actually repriced up. We've swept out this little internal high. The bodies of these candles have rejected from the OTE level, so the 0.62 to 0.79. And then we get this huge death candle down. We have a change in the state of delivery through these 2 up candles, and we have an inversion of this 1 minute. So at this point, you are extremely good to take a short. So my first take profit would have been that hourly low. So we can take a couple sell orders here with the stop just kind of above this inverse, but not too far, maybe a little bit tighter like that. So yeah, we've got the S&T holds, we've got a soup of liquidity, we've got revisit the 5-minute change in the state, then we get a 1-minute change in the state and an inverse. Bang, bang, bang. That is a great entry. Then we can see price just continues to flood the bed. And that would have been first take profit here. So if I just turn back on the executions, we can see first take profit here. And then next take profit would be the new week opening gap, which is this imbalance I've marked out here. Price reverses just a little bit, but continues to dump. So that would be another contract scale. And then if you really want to, I would most likely be all out here. But we can see we've got sell side liquidity levels all the way down here, which do get absolutely ran to. We come all the way down here. So at this point, you know, if you've left a runner, you'd probably take one there. And there you go. That is the next model for the day, in my opinion. There was also a little late entry 1-minute inversion here. So you could have entered off the retrace, take out this high, inverse that on the 1 minute, leave your stop nice and tight. But you're so close to the new week opening gap that you never know. So, you know, this is a crazy trade if you did take it. The Discord I'm in, I don't know, took a trade around here, I think, 15 a second, but that would have been like a really last chance 1 micro kind of scale. But yeah, really good day. Lost some money, stuck to my rules, nailed the drawn liquidity. Yeah, good day, can't complain.